6 of the 11 S&P sectors fell below their 50-day moving averages Friday during that sell-off, including financials, healthcare, industrials, materials, energies, and communications, like all of them, basically. So what are the technicals telling investors to do about all of it right now? Joining us with some answers, Katie Stockton, founder and managing partner of Fairlead Strategies. Good morning to you.
Morning.
So should we talk about this?
I think so. It's important.
But last time you were here, the coronavirus was not a thing yet.
That's right.
So you were expecting things to go up
over the intermediate and long term. So the market did set up for a pullback. What we saw on January 22nd, to be precise, was a downturn in sentiment.
Right.
We have a gauge that was in overbought territory, and right around here is where you got that sentiment downturn.
Right.
And that was enough of a reason to at least be hedged, manage risk of a pullback. And indeed, of course, we've seen the major indices come in a bit. The Nasdaq 100 has come in a bit less than average.
Right.
And I think that actually makes it more vulnerable in the near term.
More vulnerable for a downturn here.
That's right. So it has more than 3% downside to its 50-day moving average. The Dow Industrials, as you know, already took it out.
Right.
Stock 600 in Europe took it out. I don't see any reason why the Nasdaq 100 will not, with the tech sector outperforming.
Okay, so you think this thing is going lower? How much lower, just so we're clear?
I think, the support below that 50-day moving average is about 5 to 6% below. I think that would be worst case scenario for the pullback here. It's not a specific level that I look for, but rather a setup in the gauges. So
the reason I ask is for those investors who are sitting there on cash, watching the coronavirus and everything else, and they're saying to themselves, should I wait? Should I come in? Should I leg in, as they say, or is there something about to happen here where I have a bigger opportunity, right?
I think it's prudent to wait.
Okay.
So I wouldn't go bearish with this move. There's nothing to suggest that it's anything more than short-term in nature at this time. But it doesn't appear to be over yet because we don't have that widespread oversold condition that we look for. We don't have a reversal of the sentiment issues that we had a couple weeks ago.
Let's flip this screen around and also show folks the S&P 500 right here.
Yeah, and
show us what's going on.
This is one market gauge of breadth or market participation here down in the bottom window. So this is the percentage of stocks in the S&P 500 that are above their 50-day moving averages.
Right.
As you know, it's fallen off pretty dramatically of late, but it's still not in that oversold territory. So that's what I mean by we're looking for a setup, something that would suggest that it's done. So you see down here, we had previous lows, and that indeed, of course, was an opportunity to add exposure in that 2019 corrective phase. So.
But you're calling for this to go lower as well?
A bit lower, so it's not quite there yet.
What's a bit lower? What's a bit mean?
So we need another, say, 20% of the S&P 500 to dip below those 50-day moving averages. And I think if tech does start to underperform, we're already starting to see that with semiconductor stocks. That's where you're going to get that. Okay,
and let's finally flip this around. Gold is a different story here. Let's show you what's going on.
Listen, gold doesn't always act defensively. Right now it is at a very, very key technical level, longer term. It's right in here. Well, you can't see it, but it's a Fibonacci retracement level of around 1590. Now you post consecutive weekly closes above that. That's another major breakout for gold. We obviously saw a big base breakout middle of last year, in here. And, of course, the follow-through was impressive. But if we clear this yet again, another resistance level, the targeted resistance would become about $1,800 per ounce for gold. So that would be a pretty major breakout. We don't have it yet, but something to watch for.
You got a view on Bitcoin?
Oh, I do, yeah.
You do?
It positively correlated.
Positively correlated. I don't think we got a screen on it, but thank you. Appreciate it very, very much.